4 Kenyan banks have decided to raise their base lending rate, citing inflation as the main reason, and also the fact that the central bank recently raised the CBR from 6% to 6.25%. For a perspective on this and the impact it will have on lending in general, we're joined by Habil Olaka, Chief Executive of the Kenya Bankers Association. Thanks so much for your time, Mr. Olaka. A lot of things have been going on. Interest rate hikes taken by the CBK, raising of the overnight lending rate, all those kinds of measures coming to the fore. How do they impact on the decision by some of these banks to raise their base lending rates?
Yes, I think what you can see is that sometimes back, I think central bank took the decision to go for the tightening of the monetary stance. And what happened after that is that they made two clear policy announcements. In other words, raising the CBR rate, as you've mentioned, and also the cash reserve ratio. Those two basically had the signal to the banks of, in the market, basically the cost of deposits effectively went down. And so bankers are just reacting to the fact that their cost of deposit has gone up, and therefore they are, in order to protect their margins, they'll either have to go in line with that and raise their lending rates, or for some of them who want to take advantage and expand their market share, then they might decide to lag on a little bit, hold on at the existing lending rates, and hopefully capture the market share.
Okay, a little bit of mathematics, please help me here. Inflation at 14.4%. So obviously all the banks, the CBK as well, have to address this particular problem in terms of how they lend to borrowers. CBR rate 6.25%, overnight rate 8%, and on average, some of these commercial banks lending now at 15%. How do they come to all of these figures?
Okay, the 6.25%, which is the CBK, the CBR, the central bank rate, is basically meant to be a signal rate from central bank in terms of where the market rate should be. But also, it used to be the rate at which central bank used to lend to the commercial banks and in the overnight lending market. Now, what happened is that because the rate was a little bit away from the rate in the market, and there were banks were taking advantage of the low rate on the CBR rate to take arbitrage opportunities. Central bank then introduced what they call the overnight lending, overnight discount window, which is now the 8%, and that is more reflective of the actual market. Now, on top of that, which, you know, those two rates basically reflect an idea of where the bank's cost of borrowing is. Now, on top of that, banks put on a margin to arrive at their lending rate, and hence the rate of 15% roughly. I think the lending rate is between 13 and 15, depending on the bank that you're talking about.
Obviously, in a situation like this, it helps those who are saving in the economy because they're going to get higher rates of return. What is the culture of savings? And I'm talking personal savings and also those choosing to do it via pension funds. Where's the value for them?
I think as long as the rates in the market, as long as the interest rates are going up, there is more propensity towards saving. In other words, people, as long as they're getting real returns on the deposits, they are bound to keep their money within the saving instruments. But if the rates are below the inflation rate, in which case there is no real rate of return, then it does not encourage saving. In Kenya, of course, one of the things that you have had a challenge on is financial inclusion, which means that not a good proportion of the Kenyan population has got access to the financial products, including the saving products. And so one of the things that we are trying to work on is to extend our financial inclusion agenda to ensure that most of these deposits that could be lying outside the system are actually brought into the saving culture.
And going forward, what sort of action are we likely to see from banks? Because we're told that at the next MPC, we could see the central bank raising interest rates by as boldly as 300 basis points.
Okay, the call has more or less been the fact that the market feels that possibly the signal that is being given by central bank is not steep enough. In other words, the 25 basis points was not enough to signal which way the market was going, and therefore the pressure for possibly the central bank to give a better signal of, and there's been a mention of 300 basis points. My own personal view, I don't think it will go that high. Most probably the signal, if anything, may possibly go up by at most maybe another 100 basis points, but not beyond that because of the impact it has on the market. Because the signal, central bank has been trying to ensure that in order to promote and also to keep within the Vision 2030 targets in terms of economic growth, we keep the rates in the market as low as possible to promote the borrowing and therefore the economic activity.
Okay.
Now, central bank is keen to ensure that they maintain that.